You're listening to UCW Radio. In your face.
What we got here is a failure to communicate.
Oh, have I got your attention now?
Relax, Edward. It's good.
You know what I mean?
Money to be made in a place like this. Money never sleeps, pal.
You're crazy. Don't run when you lose. Don't whine that head.
You know what it takes to sell real estate?
It takes brass ball.
I've fallen, and I can't get up.
All right, welcome back to Money Never Sleeps, the show where we touch on anything that impacts the flow of money from small business and private equity to real estate and commodities. I'll be joined shortly by John Dines with the Private Equity Insights segment. And then we'll be bringing on Bobbi V to talk about Silicon Beach and the Silicon Beach real estate scene. It's going to be interesting. We'll be getting insight to what's going on there. It's pretty interesting over there. But before we do that, I want to let our listeners know that we will be releasing our monthly digital magazine called, but what else? Money Never Sleeps, and we will be profiling some power players in their respective arenas. We will have articles on luxury and commercial real estate, private equity, and so much more. And it's a free edition. It doesn't cost you anything, so make sure you show your support. And, you may find it really interesting. Now, what I want to do, I want to talk about Commodity Deals 101. Over the past decade, the increase in individuals claiming to be physical commodity traders has hit astronomical proportions. It's really ridiculous. This is on a global basis, from the U.S. to Russia, China to Africa. You know, there are a few reasons for this, and those reasons have made it extremely hard for legitimate physical commodity players to sift through all the nonsense. One of the top reasons for this is the Internet. Yep, the Internet helps with this, as it does with anything else. What has happened is that many people have used this as a tool to connect with buyers globally. Now, is this necessarily a bad thing? No, it's not. It's the world we live in. You need that. You need the Internet to connect with people, and it just makes the world a smaller place. So the Internet is definitely a positive thing in most situations. The problem here, and the problem that lies in this, is in some cases, these efforts come straight to gold dust. Not only gold dust, but also crude oil, cement, sugar, and so on and so forth. Okay, you have even, real estate agents that also jump into the game, which further clutters things because they think that they have the next big thing because someone reached out to them, and that's what happens. They see something, somebody contacts them on the Internet, sends them an email or something, and they think that they are commodity players. But, you have to be careful, people. You have to be careful. If you're a real estate agent and you're getting those emails, make sure you know what you're dealing with. Don't get excited with the pie in the sky, going to make $1 gazillion and retire type of deal. Because that's the furthest thing from the truth. Now, I'm not saying that you can't go out there and generate business. You sure can, but you have to do it the right way. You have to do your research. You have to do your homework. You need to know what you're dealing with. Now, these offers that come out, in some cases come from documents that have been shot through cyberspace, touching everyone and anyone, only to be recycled and spit out again as a new offer, an offer that doesn't even really exist. And I have seen not dozens, but hundreds and hundreds of such offers that come from people that have no authority in making an offer to sell or purchase any commodity whatsoever. They're using that to fish for information. So what happens is this: you may have a legitimate buyer that would receive an offer. Now, in order to move forward, that buyer would be asked to supply this information. You're going to love this. They're going to have to prove their financial capability, give their identification, which is a passport, and their address, of course, and, the things that would give someone enough information to rob you blind. I mean, you're giving your passport, you're giving this, giving that. All of a sudden, someone's pretending to be you. And this is part of the issue out there. Is the level of fraud is ridiculous, and you have these people that are just really just lining up and doing things that are beyond anything normal. So the process is non-disclosure, or it's that type of offer. Look, when a buyer puts their information and within a document, you have to make sure that you know who the seller is, who's supplying this information, because you can be getting something from a party that is, I don't know, not even part of the deal. You can get this from someone that just took information and put it all together from different documents that they may have seen to make it seem legitimate, and basically you're giving your information for someone that can commit fraud. Because they're looking for your passport, they're looking for your banking information, and whatever else that they're going to ask you for. This is all the information that they need in order to commit fraud. So you have to be careful. And those agents out there that are doing this stuff, that are getting involved with it, you just have to be careful. And I touched on this topic on a number of occasions. Now I'm touching on this topic on Money Never Sleeps, because I think it's important. And I'm doing this as a service to anyone that may find the truth useful in avoiding wasting their time dealing with quote unquote brokers or consultants that are really 15th man on the deal team or on the totem pole, or worse. They're just looking to extract information to use to rob you blind, to commit fraud. And that's a bad situation, because, you're not dealing with things in the United States, you're dealing with things all over the world. So if you get someone that reaches out to you from, Kathmandu, and you're looking to get something done, and you furnish them with all the information, not knowing if they're a legitimate supplier or not, you just opened yourself up for something that can really bite you later. So please be careful. Now, with that said, anyone looking to jump into the physical commodity scene, you guys need to make sure that what is being offered is genuine, because there's a zero tolerance level has grown internationally, meaning if you don't know what you're doing and you get involved in fraudulent activity, just, by being, giving your information to someone and trying to, throwing your name on a quote-unquote consultant's agreement, a fee protection agreement, because you think that that's protecting you in some way, and you give all your information, guess what? You're party to whatever situation is taking place. So if some criminal activity is happening, well, you are in the mix. Okay, so if you don't know what you're doing, you know what? Don't do it. Okay, there is something called Interpol, as well as national agencies that are cracking down on this type of activity. All right, so there are a number of genuine buyers out there. There are, because, they're there, and they're looking for genuine product. So my only advice that I can give someone that is looking to get into this scene is take the time to target genuine suppliers and build relationships with them, because if you do have buyers, you can actually close deals and make things happen. So with that said, I want to touch on the commercial real estate industry, actually in commercial real estate, period. New York is buzzing on the luxury real estate scene, and you'll read about that in the Money Never Sleeps magazine. A lot of things going on in New York, a lot of power brokers out there. But make no mistake, with New York City Mayor Bill de Blasio rezoning certain areas that have been, for lack of a better word, destitute, the commercial real estate game is in full swing in the outer boroughs. It's really interesting, and developers are actually licking their chops to get a hold of the next sweet project that they can get their hands on. It's really an interesting time right now, to say the least. But that's not the only thing that's moving. Commercial leasing is booming, and this is important too, because it's not just a sale or the selling of buildings or, with the acquisitions and dispositions. It's about leasing as well, because you have to get people to lease, and that is an important part of the commercial real estate game. especially in Manhattan. Commercial leasing is booming. Believe it or not, there are so many entertainment companies sprouting up, and if they're not sprouting up, they're relocating to New York City. And they're coming in size, and that's keeping building owners pretty happy, as the lease rates from downtown all the way to Upper Harlem are rising. You can bet your bottom dollar on that they're rising, because the occupancy rates are rising and the lease terms are rising. So when you take stuff off the market, guess what? It creates a situation. Okay, and what you wind up dealing with is a supply and demand issue. So if the available space is not available, then it will be a task to get space reasonably priced for your business. Okay, and there's something that you can actually do about that. Don't get me wrong, you can find what you're looking for, but doing it on your own is not the way to go. You need to find the right broker, have that right broker in your corner. It'll make your job 1,000 times easier. Okay, you're building a relationship with that broker, and that broker is going to have relationships with building owners, and that comes into play, and that will actually help you. Rattling off listings, there are so many, agents and brokers out there that'll go rattle off listings from Costa or other commercial real estate listing sites. That only does so much. You can't be a desk jockey in the world of commercial real estate. You have to be out there, and you have to be in contact with the powers that be, because those players out there are the ones that are going to help you to make deals happen. All right, I help clients find what they're looking for at realistic lease rates, that work for their business. I can tell you story after story, but I guess the most annoying situation is when a client contacts 12 brokers. 12 brokers, and they'll do it, and has you running around looking for the right space for them, only to find out that they've been calling everyone in town. And what that does, if you're good at what you do and you're a good broker, what this does, it takes time away from you. And you wind up spinning your wheels because, you wind up crossing paths with someone else that they reached out to. How do you work with 12 brokers if you're looking for one space? That doesn't make any sense to me. How can a broker help someone that is shopping around? Very hard to do, and it's time consuming for the client, but more importantly, it's time wasting for the broker. And that broker is working so hard to put together situations that work. If you have a good broker, stick with them. For those that are looking for commercial space anywhere in the country, the advice that I can give you is this: find yourself a quality broker. Meet with them face to face and let them do their job. This is going to save you time, allow them to bring in the right situation, and allow things to work out properly for you. There are so many good and qualified commercial real estate brokers out there that, you need to just look to find the right one that fits you, because not every broker fits every client. So it has to be the right thing for you. Okay? All right. Anyway, now it's time to get into private equity. And I hope me speaking about the commercial real estate arena actually helps someone out there, because it is important. Okay? So now, let's get to private equity. So at this time, let's bring on John Dines with the Private Equity Insight segment. John, how you doing, buddy?
Good, how are you?
Pretty good. Now, we're all ready for a dose of your private equity insight. What's going on in the world of private equity?
Well, we are seeing some very good growth within the first quarter. Second quarter numbers aren't out yet, but the amount of fundraising again this year is increasing, and we're seeing that that increase again, as stated previously, points to more of that acceptance of these funds within the marketplace today, and to me it also points to the nervousness, well, I should say lack of nervousness that was previously in the market about tying up assets for several years within a private equity fund structure that now seems to not be the focus of concern.
Well, let me ask you this, John. Now, someone investing in private equity, you have a lot of people that are conservative with their investments. But when they invest in a private equity fund, that kind of allows them to be somewhat risky, kind of, without actually being risky directly.
Right. They're able to focus on more private investments. Within that structure, there is inherently more risk because these are not, although they've done their due diligence, these are not the same as a mutual fund. It's not the same as a listed stock. So it comes under some different set of rules. However, there is the ability to do that due diligence and mitigate some of that risk within that fund structure, of course, by looking at the general partners, looking at their track record, looking at their previous funds, looking at the different sectors or the investments that they're putting inside of the fund. So there are obviously ways that you can mitigate that risk and be able to make intelligent investments within private equity.
And with what you do, John, you help to raise capital for these private equity funds, but you have two different levels that you work with. Why don't you share that with us so that our listeners, they know the different, just to get more insight on private equity, so they know the different levels in the world of private equity, especially with what you do.
Are you referring to the amount of the capital?
Yes, the capital raises and sizes, yes.
Well, we tend to focus on more of a niche area, which is the $100 million to $500 million funds. What I do see presently is there's a lot of smaller venture capital funds in the $50 million range that are coming to marketplace, more so this year than in years previous that I've seen. And that also is a signal of acceptance, because in years past, smaller funds lower than $100 million by institutions were not accepted at all. There was never a great deal of participation from even family offices, registered investment advisors, fund to fund. Any of these people who deal with emerging managers typically would not invest in less than $100 million, because that was their way of also mitigating some of that risk. If they're investing $5 million in a fund, they don't want to invest $5 million into a $50 million fund and be a majority shareholder or unit holder. That's concentrating your risk. So they would typically look at beyond the $100 million and look at $200 million to on up to $1 billion funds. But now there's companies like NCAP in Texas that are doing $7 billion funds, raising $9 billion funds. I mean, the extent at which some of these private equity funds has dramatically changed from, $100 million to $1 billion, now from $1 billion to $9 billion. So we tend to focus on the smaller end that Goldman Sachs, Credit Suisse, J.P. Morgan, Barclays, and all of those big guys don't want KKR. They'll kick to the curb because there's not enough revenue in it for them. But I focus on that area because, to me, that gives us not only the niche to separate ourselves from the big boys, but it also, typically there's more alpha in it. It's a lot more, if you're going to get a higher ROI or return on your investment in a $100 million fund than you will in a Paulson's $26 billion fund.
Mm-hmm.
So it's a lot easier to steer the ship at 100 million or 200 million than it is to steer it at 20 billion or 26 billion.
No, I agree with that. I agree with that.
It's much more difficult to get double-digit returns in a $20 billion fund than it is in a $200 million fund. So you're seeing now, though, also a lot more deal flow in the lower end. I'm seeing a lot more smaller deals that are being put together within the $100 million, $200 million, $300 million funds, and I'm seeing a greater number of $200 million funds than I am of $2 billion funds.
And with these smaller funds, they need someone like you because the big boys, as you mentioned, Goldman, Blackstone, KKR, you know, they won't move a pencil for anything less than, you know, X amount of billions. So you do have funds out there that are looking to raise, you know, 10, 50, 100, $200 million, and for them, their options are either try to do it yourself or bring in someone from the outside like yourself to get it done for them.
Well, and as I mentioned, I think before, it is much more cost-effective to, rather than build out your own internal investor relations department team at 3 times the salary. The cost is 3 times the salary of each employee when you're done with all the taxes, health care, recruiting costs, training costs, etc. And
Obamacare doesn't help?
That helps towards creating our part-time society we've now are able to focus on. But it's the healthcare costs also factor into building out that internal team, definitely. But these companies are far more advantageous to pay that cost of a placement agent who's already have the relationships and introduce those relationships and take some of that deductibility for paying those fees and be able to accomplish that quicker than it would be to build out an internal team. And these smaller PE firms and venture capital firms also, they do not meet the investor mandates for the larger institutions like the pensions, endowments, you know, the CalPERS of the world. They're very selective. Their mandates require certain levels of track record, certain years of history, certain levels of assets under management. And if you don't meet those mandates, those requirements, call us back when you do.
And it doesn't matter who you are.
Right. You could be George Soros breaking away from Soros investments, and if you don't have a team that has an existing 5-year track record, it doesn't matter who you are.
Well, that's very interesting. You know, John, what I like to do, if we can, you know, let's talk about the dynamics of a private equity fund, because I think that our listeners, you know, would find value in that, especially if they are looking at investing in private equity, in a private equity fund or firm, and we can give them some useful information.
Sure. And in particular, what were you looking to bring to light?
Oh, well, how the structure is, you know, with the board of directors and the different dynamics within the fund, so that when they're looking at it, they can kind of get a basic idea of what the moving parts are within a private equity fund.
All right, and keep in mind the first place to start is always at the beginning, which is the separation between the general partners, which are typically the guys who are going to be managing the fund. Those individuals who are within the private equity community who formulate the structure of the fund with their counselors, will go ahead and set up, typically, as in the past, it's either a 2 and 20 structure or a 1 and 20 structure, and that means that management charges either 1% or 2%, and they charge that management fee on a year-by-year basis, and then there's also the 20% of the performance fees, which they get to keep. That's their hurdle rate. They get paid before the LP investors get paid, and that's typical in the marketplace for that type of structure for a PE fund. It's not. There's some deviations from that, but that's the basic model. The LP investors, of course, the limited partner investors, are a range between, as I mentioned, we focus on an area that is uncommon to private equity. We focus on the registered investment advisors, which those guys will typically they're wealth management guys. They're focusing on primarily ultra high net worth investors, managing money for ultra high net worth investors. But today, since there's been that shift in wealth that I've discussed before, away from the pensions into registered investment advisors, their client base now is grown from the CEO to now insurance companies, private banks, pensions, endowments, and foundations, and subsequently, this is where now they really are able to control larger amounts, in excess of $20 trillion of wealth on an international basis. So there is been a dynamic shift from the institutions to a more fee-based type of registered investment advisory structure. And, of course, family offices have grown. You've seen more wealth acquired within various families that have set up a single-family office structure. So you're seeing a change in the type of investors within these private equity funds. You get sovereign wealth funds now that have grown from the Saudi families to families in China, families throughout Asia, throughout Europe. So you have more fund of funds now investing in private equity, and that tends to be very a good avenue for a lot of the high net worth investors who want more of that layers of risk mitigation, more layers of management. They feel more comfortable. The larger institutions won't invest in fund of funds, but the high net worth guy will.
And you deal with these high net worth investors?
Yes, and we have several thousands of relationships with these various high net worth investors, and we can offer everything from sub-advisory on managed accounts and helping some of these registered investment advisory firms broaden their investor base to private equity funds who have never had the high net worth investor invest in their funds, and venture capitalists also who are looking for high net worth investors, because some of these high net worth investors are much more receptive to, especially like venture capital funds or some private equity funds, where there is more risk, because their underlying investments are more speculative.
Mm-hmm.
You get some of these family offices who will pride themselves on investing in unique things, more niche type investments underlining within the fund. So those are the type of LP investors that we deal with, which really are more of a fit for the private equity firm on Fund 1, Fund 2, Fund 3 that are, especially in Europe, that are looking to expand within the United States.
And the private equity funds and firms out there that are looking to raise capital, they would utilize you to do this and build those relationships.
It's much more quicker to hire us to introduce those relationships than for them to try to manage these investments and find these relationships at the same time.
When it's also marketing and everything, and it takes time, effort, and money to do so. So, dealing with you, they're ahead of the curve.
Exactly, and also, as I've mentioned, since our firm does have more vast distribution channels, I like to think of the fact that we are ahead of the curve comparative to the Blackstones, the Goldman Sachs, the Credit Suisse, who are simply marketing to the larger pensions, endowments, and foundations, especially when you've got Detroit restructuring their pension fund. You've got Chicago in jeopardy of having to restructure their pension, and the city of New York, Manhattan, having to have their own difficulties with restructuring their pension. There's a lot more underfunded other types of pension funds that are in jeopardy. So I think that marketing to these various registered investment advisors and other avenues like family offices puts us ahead of the curve, because we won't be experiencing the issues that the Goldman Sachs and Credit Suisse and Blackstones will be experiencing in the near future.
That's interesting. Now, why don't you let our listeners know that may have an interest in what you're doing, how to find out more about, what REO Capital is doing, because I think that, if they are looking to invest in a private equity fund, or if a private equity fund is looking to hire an outside consultant, why not you?
Well, I think that we're, as I've mentioned to other PE firms, it's not the number of funds that dictates whether the placement agent who's going to raise capital for your fund should be hired. It's not measured by some firm that's doing 100 capital raises a year, or 20 capital raises a year, or 2 capital raises a year. That's not what is the deciding, or should be the deciding factor, because inevitably general partners who are making decisions based on those variables are going to find themselves experiencing an expensive lesson. And that lesson is that what's most critical when you're looking for a capital raising firm is, are the LP investors they represent and the relationships they have, are they specifically geared for your type of fund? In other words, if you've got a first-time fund, or if you don't have a 5-year track record, and you don't have $500 million under management, and you've got a very kind of a niche fund of your own, the institutional guys like Blackstone and Goldman Sachs are not going to be right for you. And don't be misled into thinking that because they're bigger, that means they're going to raise capital sooner. That's not true. That's a naive thought. And what is really the truth is that LP investors will look at certain types of funds, and certain LP investors will make certain types of investments. And if you don't hire the placement agent that will fit your type of fund, then you're going to waste your money spending $10,000 a month on a retainer and 3% success fee of all capital they do raise. And I do tell people, because people ask all the time, the question, which to me is ludicrous, is how quickly can you raise the $100 million or $200 million or $500 million? And I tell them, by the time people send out your pitch book, PowerPoint, send out the legal documents, set up a conference call, 3 to 6 months can go by very quickly. So there are a lot of placement agents out there that will tell people, sure, we can raise $100 million within 12 months. And I tell people, if somebody says that to you, run quickly the other way. Because there is no guarantees in this business. Just because your name is Blackstone, or just because your name is Goldman Sachs or Credit Suisse or JP Morgan or Barclays, doesn't mean that they're going to have an easy time making a few phone calls and putting, $500 million into your account within 12 months.
All right, well,
that's not the way. I mean, nobody's Houdini. Nobody's going to be able to wave a magic wand over the phone, make a few phone calls, and presto changeo, you have $500 million.
Well, there's no magic. There's no magic in finance unless you have special powers, which not too many people have.
And there's no guarantees. Nobody offers guarantees except for annuities. So if you want a guarantee, call an annuity, put your money in, get 3% with a guarantee, and there you have it.
That's it. So now, why don't you, I know we do it every week, but why don't you give your website and give your information so that anyone out there listening, if they want to find out more, they can find out more, John.
Good. It's www.reocapitalllc.com. And we have, as a matter of fact, something rather unique that we're offering. In today's day and age where, of course, some of these technology companies are being acquired for $16 billion, $19 billion, we're looking at trying to put together a very talented team of board of directors who are not just board of directors, but they're also JV partners that will share in the revenues of our firm. And we're offering a very lucrative return for those talented individuals.
And they can find out more about that by contacting you, right?
Exactly. Okay. And there's also, on our team page, there's also a link for more information on that. And I always tell people you don't have to invest in the next Snapchat to get or Facebook to get a lucrative return.
There you go. There you go. John, thank you for the private equity insight. It's always insightful every week. And we'll have you on next week as well, because you're a permanent fixture on Money Never Sleeps. Okay, on that note, stick with us as we bring on the Silicon Beach real estate scene right after these messages.
This is AP News Minute. Sunni militants turned over the bodies of 15 Shiites to authorities in Kirkuk, the latest sign of the sectarian violence gripping Iraq. Speaking in Cairo, Secretary of State John Kerry signaled U.S. discontent with Iraq's Shiite Prime Minister, Nouri al-Maliki. Kerry said the U.S. wants the Iraqi people to find leadership that's inclusive and represents all of Iraq. Former U.S. Attorney General Dick Thornburg is recovering in a Pittsburgh hospital after suffering a mild stroke. His wife said it happened on Saturday, and doctors are optimistic about his recovery. Amateur and professional cyclists from around the globe gathered in Sarajevo, Bosnia-Herzegovina, to take part in the Sarajevo Grand Prix, a race to promote peace and commemorate 100 years since World War I. Ned Barker, The Associated Press, with AP News Minute.
All right, now we're back on Money Never Sleeps, and now it's time to bring on Bobbi V and the Silicon Beach real estate scene.
California.
All right, Bobbi V, welcome to the show. How are you?
Hey, good. What's up, Louis? How are you?
No, doing good, doing good. We're looking forward to hearing your input on Silicon Beach, because a lot of things are going on over there. But before we do that, I want our listeners to get more familiar with you. So why don't you give us a brief synopsis on who you are and what you do?
Okay, well, as far as I'm concerned, I'm kind of living the dream. I came from the Bay Area, where I was a top producing agent for 13 years. Moved here about a year ago. And I live in Venice, work at Abbott Kinney Real Estate, which is right smack in the hub of everything, all the excitement going on right now. And I'm working with all kinds of different people, high-end real estate, flippers, investors, people, tech companies starting up looking for commercial space, a lot of people buying commercial space and incubating, smaller startups. So it's a lot of fun, a lot of retail stuff going on.
Well, you got a lot of action going on there.
A lot of action every day, all day long. It's so much fun.
Well, that's a good thing because it allows you to enjoy your job a little bit.
I've always enjoyed my job. I love my job.
But you were a top producer in the Bay Area. You went down there to Silicon Beach, where we know it as Venice Beach, but now it's Silicon Beach because of what's going on over there. Give us a little a little background on what's going on over there, because some people may not know.
Well, I think Venice Beach is the last beach city to kind of come back up and turn itself around. Santa Monica came up, Manhattan Beach, Redondo Beach, and Venice Beach used to be a place where, I'm hearing on a daily basis parents wouldn't let their kids off the bus on Abbot Kinney, if you can believe that. It was so bad. And so now it's just crazy. Google's here. Snapchat just bought a couple of buildings about a block off the beach. Facebook has a presence here. Bitcoin is here, although they're controversial right now. But everybody's here, and things are really exciting on a daily basis. And, what I'm enjoying so much are all the young people coming to the area from everywhere, from the Bay Area, from from New York City to start up their own businesses. And I think it's really, it's cool to be part of that and get behind it and help them find, either whether they're buying a building or they're looking for a commercial lease. It's really a lot of fun on a daily basis to be here right now.
No, I mean, there's nothing better than living in paradise and doing what you love to do. So tell us, with the tech companies that are going over there. You mentioned Google, Facebook, and Bitcoin. I'm sure we're going to see Twitter and everybody else. Now, all these startups, in the Silicon Valley. There was a big explosion over there. I mean, you had property, prices that went through the roof. Now you see that magnet actually happening where you're at right now. That's why you're there, because what did they ask Bonnie and Clyde? They said, "Why do you rob banks?" Well, because that's where the money is, and you're going and you're going where the money is. And right now, the big money is flowing into Silicon Beach. So, I mean, if you had to gauge the growth in that area, how would you gauge it?
You know what? Right now, it's hard to gauge. It's just on a daily basis. It's running, run. The people that call, for starting. It's not just the tech and the startups. It's people now are coming from everywhere to start retail or open shops, open restaurants, and there's just, it's almost right now like there's not enough space, retail or commercial space for people. It's happening so fast on a daily basis. I wouldn't even know how to gauge it. We're all just kind of running, with it. And, fortunately we have, I've got access to off-market properties, and so we have the ability to, find things that aren't, snapped up by other people right away that are on the market, or the MLS, or, LoopNet, or any other venue, which is good, because that way we can, I can make sure to take care of clients when they call and find them a space.
Well, let me ask you this, because, with that type of growth that's going on over there, if you have a lot of tech companies, tech startups, incubators, and everything happening over there, I'm assuming that, there's been a slight rate increase on the commercial end, and probably also on the residential end with sales and rentals.
Absolutely. Like I was saying, not long ago you could get a space for at least $3 or so per square foot for commercial space. now we're at an average of $10 to $12 per square foot, anywhere close to Abbot-Kinney. It's starting to, spread over to Rose Street now, but Rose Street's wonderful. The thing with Rose is that it's only got about a block and a half of restaurant and retail, and the rest is all residential, and a little bit of live work type stuff going on. So everybody is kind of focusing right in. When they call us, they're like, well, we want to be on Abbot-Kinney, or we want to be within a block or two of Abbot-Kinney. And, there's even some spaces that are $15, $16 per square foot. And the couple of homes that were on Abbot-Kinney that were residential have now been zoned commercial, which took about 3 years, but they're zoned commercial, and where they're putting in little cute restaurants in those, or the guy's opening a sock type store, or all kinds of stuff. But we just keep spreading out all along Abbot-Kinney. So it's just a really exciting time right now to be here, and I don't think I saw it coming, because I've been here a year, and I came just to live the dream and work in real estate in Venice, and I didn't imagine things being so amazing, and it's just a cool time. It's really neat.
Well, let me ask you this. You said the rates went from about $3, maybe $4 a square foot on commercial to $10, $12, $15 a square foot. That's crazy.
Crazy.
Wow.
Yeah, and people are willing to pay it.
It's supply and demand, I guess.
It's supply and demand, and as things continue to change, as these shops, all along Abbot-Kinney, there's some amazing, every shop is completely different than the next one. Every restaurant is different. Every coffee shop is different. We've got, First Fridays on Abbot-Kinney. And I think that as all of that starts changing, it just becomes, the place to be. With every single week, it's changing and going up. For instance, I have a building for sale right now, right smack in the middle of all the action, that, the tenants it's for sale now, and the tenants that are there, startup, right, they're not a startup anymore, they're doing great, but they've been there for 3 years, and they're willing to pay, I'm not going to give away what they pay, because it's not my right, but they're willing to pay $4,000 more a month just to get to stay there.
Wow, and that's after the sale. They're looking to make that type of deal.
Right. Well, they're hoping that that's going to sweeten the deal, and it should, actually, because, we're listed at 2.5, and this building, in fact, it's two residential homes joined together that are now zoned commercial. It's a really cool space, and I love, every day I'm showing that building, the people come to work, and this is just part of Venice. This is what it's like living and working here, or getting to work in the tech, startup. They come to work either walking, or they come on their beach cruisers with their dogs and their baskets, and they open up the big double garage doors, and everyone's just hanging out, talking on the phone, doing their thing with their dogs sitting on their desk, most of them. It's really cool, but for this building, for an investor, you think about it, it's $2.5 million, and somebody's going to pay the amount of rent that these people are willing to pay just to stay there is, that's an investor dream as well, because you cover your costs.
Well, as long as
and it's only going to,
yeah, the cap rate is there and everything makes sense. Wow, who's better than the person that's going to buy the building?
Right. And the people that are in there are amazing. So, that's just one of the many deals going on here in Venice that make a lot of sense for people. And, buying the single-family homes, whether you live around here or not, you buy a single-family home and you can get, our rents now, you can get a one-bedroom for $3,500 right now.
Wow. Those are New York prices.
Yeah, New York prices with the beach. So
with a beach view, you can't beat it. You're going to be a weekly fixture on the show, and you're going to be speaking about a lot of different things. What I want to do is go back to the listing that you have, the commercial space. Can you give, without, I know you don't want to give out the address, but if you can give out some specifics on the building itself? So that hey, there may be a listener out there that's interested in some property on Silicon Beach. You never know.
Silicon Beach. Well, like I said, the cool thing about this space, and one of my favorite things also, side note, about Venice and some of these buildings is that from the outside, they don't look great. There's some of them might look like dogs, but you walk inside, and like in this particular space, the one side of it that was a house, they have this huge, beautiful table that they use as a conference room, but they have and then there's a full bathroom right there. There's cement floors, vaulted wood ceilings, and then they have this beautiful kitchen. It's like, I mean, I wish I could live there. If I could afford the, outrageous rent, I would love to live in both the spaces. They have the kitchen, the whole thing is cement floors. They've got these huge double garage doors and this huge space for people to just put their desks and the way that they get to work in there is amazing. It's all ready to go. There's 2 full baths, and it's right on a corner. It's walkable to, it's like a half a block off of Abbot Kinney.
Is it one story? Is it 1 story or 2?
Well, it's kind of, I guess you could say split level. So when the one side of it, the one original building is now joined by like 3 steps. So you've got this huge open space with a full bath and the garage doors that I was speaking about. It's kind of an L shape, and then you go up these 3 stairs into this beautiful kitchen and this whole other. I guess it's could kind of be like a huge 1-bedroom with a full bath. So it's technically, I guess, split level, but it's not. It's just 2. It looks like 2 houses, literally. You'd never know what's going on in there. It's so cool.
Well, that's going to be another acquisition going on in Silicon Beach, and I'm sure that's going to get scooped up pretty quickly. Now,
Yeah,
Bobbi,
so.
yeah, Bobbi, just as this is towards the tail end of the show, so I just want to get your information there, out to our listeners, because as I said, you're going to be a regular fixture on the weekly show. Why don't you let the listeners know how to find out more about you, first thing, and second thing, how to find out about that listing, because of course you're going to have details on your website that we're not speaking about here.
Right. Well, my website is bobbivogel.com. BOBBI, B as in Victor, OGEL.com. And anywhere on social media, I'm Bobbi V Realtor, on Twitter, on Instagram, on any of the venues. I've got a Facebook page, and the property's on my blog, along with other things, and all kinds of information about me and any properties that we have. And of course, like I said, there's lots of properties we have access to that are not on the market that you're not going to see anywhere.
Pocket deals. You gotta love the
Pocket.
gotta love the off-market stuff. I love that. Because you're bringing something that they normally can't get. There's nothing better than that. Okay, so so that's cool stuff.
About the pocket listings, this is really the other cool thing about Venice is it's in Los Angeles, but it's almost like it's a little tiny village basically. So the people that are here and live here, even though they're having a hard time, the people that have been here for years and years, they're having a hard time with the gentrification, most of them, but it's doing amazing things for this little town, and that's exactly what it feels like to the people here. And that's how we all have knowledge, of the off-market deals, just because of the vibe of this town, really.
Well, you know what? You're there. You went there. You went from the Bay Area to Silicon Beach, and you're looking to make a statement. You were top broker over there, and now over here you're going to be one of the top agents in the area. I'm pretty sure of it. I see that happening. And for all the listeners out there, especially the ones on the West Coast that are looking to make investments in the area, check out Bobbi V. And if you're looking at Silicon Beach and you're a tech company, definitely check her out, because she can help guide you along the way, because, she knows the lay of the land. and she knows the owners of the properties. And I spoke about that earlier in the show. If you know the owners of the properties, it makes it easier for you to make a smooth transition to getting the either leasing or buying the property that you're looking to acquire. Okay, but Bobbi, I want to thank you for giving your Silicon Beach insight. I love it. And for our listeners, make sure you tune in next Monday, and we're going to have some more interesting information coming from Bobbi V, coming from John, and coming from myself, and we're going to be bringing on some interesting guests. So it should be a lot of fun. Okay, and also, and I said this at the beginning of the show, saying it now again at the end of the show, and I'm going to leave you with this. Make sure that you check out the Money Never Sleeps digital magazine that's going to be coming out end of the month, and you'll hear some input from Bobbi V on Silicon Beach. Until then, hopefully you have a profitable week, and come back with us next week, and we're going to make this as interesting as possible.
You're listening to UCW Radio. In your face.
What we got here is a failure to communicate.
Oh, have I got your attention now?
The lack of better is good.
You know what I mean?
Money to be made in a place like this. Money never sleeps, pal.
You're crazy. Don't run when you lose. Don't whine my head.
You know what it takes to sell real estate?
It takes brass balls.
I